Welcome everyone then to another webinar by Disrupt Network. Today we will be talking about investing in Bitcoin equity or tokens. It's another online panel discussion, so we will have 4 speakers and Philipp to moderate the event and ask questions.
So first of all, I would like to ask everybody to quickly present himself for 2-3 minutes, such that everybody is able, of course, to present himself, his company, and such that the audience is also getting a feeling of who is speaking here, where does this opinion come from, because the opinion is, of course, always dependent on the company somebody is working in. Who would like to start? Maybe Katharina, would you like to start to quickly present yourself?
Sure. Thank you, Philipp. Good morning, everyone. Katharina Gehra is my name. We're running the blockchain fund. It's a BaFin-registered crypto hedge fund based in Grünwald in Germany. We've been live since the beginning of this year, and different to many of the other asset managers out there, we're focusing on Ethereum and ERC tokens. So Bitcoin is not in our focus, and yeah, we've been very happy with the year so far. We think it's going to be an interesting year for the asset management industry and cryptos in general, and looking forward to this session.
Perfect, thanks. Who wants to be next? Maybe Demelza, would you like? Oh no, your mic is still unmuted. Lasse, would you like to present yourself?
Yeah, hi, good morning. My name is Lasse. I'm the founding partner at 1KX. We're an early stage token network fund, so very similar to sort of Silicon Valley style network investing, you know, that has become quite prominent over the last 30 years. We invest in networks, but we invest only in tokenized networks, so open source, quasi non-profit token networks or crypto networks. In fact, our t-shirts actually on the back, they say token maximalist. And you know, there's more to it. Maybe I can go into detail later, but we actually see that for very large software networks, it's going to be impossible for a typical for-profit company to compete with those open source networks. And the short way to put that is, imagine Bitcoin or Ethereum had been a private company, nobody would have cared.
Perfect. Thanks. Demelza, would you like to present yourself quickly?
Sure. So my name is Demelza Hayes, and I'm based in Liechtenstein. I've been here for 5 years. I started out with a Bitcoin ATM here, and then I quickly moved on to the Vermögensverwaltung world and started working on a crypto fund. There were 3 crypto funds approved in Liechtenstein in 2018 on the same day, and one of those was the fund that I was managing with Incrementum, and that was invested in physical Bitcoin. So of course that took a long time to get the regulators on board with, and the custodian banks. And actually I ended up leaving that fund in October, and I'm now managing a VC fund out of Cayman called the Dash Investment Foundation. And it's owned by the Dash protocol, the Dash network cryptocurrency, and all of the capital for that fund comes from the mining, you know, the protocol itself through the inflation rate. So that's basically where I'm at. I was in, I'm also a doctoral student, and yeah, writing research on cryptocurrencies.
Perfect, thanks. And then we have Stefan, who should quickly present himself. Stefan, are you here?
He's on mute.
Oh. Then, well, maybe he presents himself later when it works again. But let's just simply start into the discussion. And well, what happened overnight, or what happened yesterday and the last days? Bitcoin rose. So maybe let's start with this question: what is your interpretation? What's going on here? Why is it rising quite significantly in the past days? Who would like to have an interpretation here? Demelza, would you like to take this question?
Oh, wow. I'm probably not the right person. All of the strategies that I do are not based on, you know, day trading. But in general, I mean, if you look at the data, the past historical data, we were at 14,000, almost 14,000, actually last summer. So we've passed 10,000 in 2019. And of course, we went down again. In March, we were at 3,600 at the low during the panic. So this is really a roller coaster ride for Bitcoin investors. From my perspective, this is, the halving, of course, reduces the supply. So ceteris paribus, demand is held constant, supply is decreasing, we should have an increase. But on the other hand, historically, and I'm sure the other speakers in this room can attest to this, historically, the real gains in crypto, in Bitcoin specifically, occurred the year after the halving, not the year during the halving.
Even not before. Stefan, would you like to now quickly present yourself, because we had a technical issue 5 seconds ago.
We can't hear you,
yeah.
But you are unmuted.
Still a microphone issue.
Yeah.
No.
It worked so well before. We could hear him all the time.
It worked just now. Maybe, yeah, I think my take's also kind of unqualified. We're a long-term investor, but sort of the halving is a bit, honestly, it's a bit of a meme, because the thing is, this information has been in the market since the Genesis block, right? There's no new information coming to the market. Everybody knows this, right? And I think there is just these very concerted efforts by some holders to every time create this excitement, because again, there isn't much happening with Bitcoin. So you gotta sort of every 4 years, you have this event that you sort of, try to line up retail excitement about. And then it does become kind of a self-fulfilling prophecy. These people that really trade in crypto, they're also like all about front running. So pretty much this, within a day before even they will sell these news, right? So you're likely going to see like, a drop in prices. And then it takes about 3-4 months for the inventory, the sell inventory and the order books and the exchanges to actually clear out. Yes, there is actually, a reduction from mining supply. It takes about a couple of months for that to sort of arrive in the exchange order books, because miners, they don't sell every day, right? They give this to trading firms, and the trading firms try to, sell at maximum prices, and that could have a couple of months of lag. And then like she was saying, that usually a year afterwards or something, that's when you really see that actually the reduced sell pressure is having some effect.
Okay. And Lasse, you are promoting promoting the token world, the token economics. Do you think that this is the best way to invest in the blockchain area? Basically, not just focusing on Bitcoin, but focusing on all kinds of tokens?
You know what? It's very specialized. I would say we're probably tip of the spear of the entire space. So we usually invest in some scientists that have maybe a track record and a draft of a white paper. So very, very early. So I think it's, it's higher risk, higher reward strategy. Like generally, like venture capital, the returns can be, outsized, but you have to have picked one of those early and the right ones, and you got to hold through 3 to 5 years. That's where, in our experience and my personal experience with Ethereum, I put all the Bitcoin I had in the Ethereum ICO, just held it until 2017. And that is when you really sort of have outsized returns, which then make up for the rest of the early stage bets that are not working out, right? This is very similar to venture capital, where sort of, you try, you have 10, 15 investments in a fund, and you have that fund maker, right? You have one investment that really returns the fund, and then the other ones, there's 2, 3 that maybe make some money as well. There's a few others that you lose all your money, and then some you get your investment back. So I think for anyone who's not, in 2017, you had a lot of retail participation in early stage token investing as well. It was kind of easy. It was a bull market. No matter what you bought, the thing went up. It was very de-risked. And I think now what we're seeing is that strategy, it is a full-time job. It is very difficult. So in 2018, I flew 9 times around the world, right? So it's a lot of work. It's a lot of networking. It's a global market. You have to be very present. It's a very tight-knit community. So you have to invest that time into the network, into keeping up with the people. So I would say for anyone else who doesn't do this full time, I would definitely recommend just buying Bitcoin, and particularly Ethereum at this point. But if you're ready for a new full-time challenge and you have the resources to invest in the network for 1 or 2 years, then go all in.
Okay, so you would argue that you are some kind of active managed fund. That means you have to do research, you have to meet the people, you have to make your own judgments, such that ultimately you are able to basically choose what tokens to purchase. Because if you're not doing this, then you would purchase any random ICOs, and then value would decrease by 90%, as we have seen it in the last years, right? So therefore, you are doing like a lot of research, meeting people and investing this. Katharina, you are having an entirely different approach, basically also token related, right? But more statistically. What's your take on basically benefiting from the uprise of blockchain in the world of tokens?
Mm-hmm. So I think first and foremost, different than to Lasse, as you said, we are not focused on picking and selective token, but we look at the overall Ethereum network and each of the tokens, and then we form an opinion based on our algorithmic signals on which are the tokens that we believe will have the highest price increase over the next, let's say, rather short-term time, and then we go in and out of those positions. I do think that overall, for me, the entire Ethereum versus Bitcoin play is something that we like to compare as the telephone and the smart phone with an app store. I think that Bitcoin has its purpose, and it certainly, you know, fulfills a number of things that investors look for. But there's a whole different game, and that's Ethereum and the ERC tokens, because it's not just the single purpose. Is it an inflation hedge? Is it a store of value and all these things? But is there actually being value created by creating a business model of the Googles or the Amazons of the future that do have a business model that will actually create value on its own? So although we're not a stock picker, so to speak, like Lasse, I do think that in Ethereum and for the opportunity it provides with the tokens, there is a whole new, you know, asset class that also will appeal to investors that currently think Bitcoin is speculative, but I don't want to do speculative investing. So I think Ethereum and the token world is the one where you will see from our perspective a much bigger inflow also from institutional money over time.
Interesting. That's exactly a similar target, but another method, basically working quantitatively. Yeah, let's give Stefan another chance if the technology now works. Stefan, would you now take the chance to present yourself?
I hope you can hear me now.
Yes.
Okay.
Please.
Yeah, it works. It works at the beginning, so I don't know what's happened in the meantime. Yeah, we have a different approach here, of course, because I'm working for a venture capital company, so investment company Finlab AG here in Frankfurt. I'm the board director or managing board director of Finlab AG. We don't invest directly in tokens or coins. We invest in companies which using maybe the blockchain as an underlying technology behind Bitcoin, of course. So, for example, we have invested in an Iconic Lab. It's an asset manager here in Frankfurt as well. Like maybe Lasse knows the company as well. So. And also we have invested in Moderator, maybe it's for Demelza, because they are also working together with Dash. So we are not investing directly in Bitcoin or tokens. We are more investing in equity. And beside our venture capital business and direct investments, we have set up a fund with EOS, so the Block 1 guys, which have published the EOS token. So, and together with Block 1, we have set up a fund which is supporting the EOS.io community. So we invest also in companies which adapt or using for their product EOS.io protocol. So that means, of course, we are very interested in the ecosystem and looking here what's going on. And mainly, of course, in Bitcoin, because it's more or less the locomotive of the cryptocurrencies and blockchain ecosystem. And as Lasse has said already, when you're not working full time in this business and not familiar with all these different tokens and economics behind these tokens, you should maybe not do it with so many different coins. So maybe you can buy Bitcoin to start or Ethereum, but we have so many products coming into the market right now. So crypto index funds, which is a bunch of cryptos included. So that makes more sense than for people who cannot full-time follow the market and have not the facility to have research any day. So, and as again, we are more in the equity space here and looking for companies which adapt blockchain for their business, but not picking here direct tokens or coins or Bitcoin.
What I find interesting now is the following, and I saw this last year also. I think we all believe in the uprise of the blockchain technology. I typically say that in terms of progress, the blockchain technology, including crypto and DLT, has a progress now of, say, 1% of 100%, and these 100% will be reached in, I don't know, 5 years or 10 years. Now we have 1% and the curve is going up. That's my argumentation typically. And interestingly, you can, in case you believe in blockchain, you can purchase Bitcoin, Ethereum, as we have seen, tokens, equities, stocks, and so on, funds. There is all kinds of possibilities to really participate from this upside. And that's interesting because in the area of artificial intelligence, you do not have this possibility. You can't really invest in AI. That's not possible. If you would like to invest in AI, then you end up with Google, Facebook, and so on. And therefore, what I really see also now in this panel discussion is this huge breadth of assets where you could invest. Interestingly, we have a couple of people here who are really focusing on their strategy. I think that makes sense. But now, generally speaking to all of you, what is the best strategy in case you believe in the uprise of the blockchain technology? What is the best strategy to invest? Is it Bitcoin, Ethereum? Is it your fund, this fund, that fund? Or is it maybe distributing assets across multiple vehicles to also care about risk and get improving the risk-return ratio? Who would like to take this question? It's a very general question. What is the best strategy, the best tactic to benefit from this entire uprise of the technology?
I actually think it depends if you're deploying some serious amount of money. I actually think it's one of the few spaces where a fund of fund really still makes sense. And so, for example, we have one LP in Zurich called L1 Digital that's done a fantastic job at harvesting sort of institutional, European institutions' investments into crypto, which is, sort of very challenging. And they've been able to basically create a product that is institutional grade, and it's mainly by taking volatility out, right? So if you have, obviously we are exposed to even more volatility than Bitcoin because the liquidity of some of these networks when they mature that we hold still, even though they're liquid and traded, the liquidity is low, it's very, very volatile. And that obviously is something that for traditionally finance minded people is just unacceptable, right? If you have, no matter where in finance you are, if you have something that drops 20% a day, you will be told to get rid of that. They don't even care what it is, just get rid of it. This is junk, right? And so obviously it's important to create sort of a fund of fund product and maybe in a simple way pair 1KX with a lot of volatility, pair us up with a few market neutral quant funds, right? And that takes the volatility out. And now that makes it a product that an institution can handle because if they get their monthly reports or their quarterly reports even, they can't be up and down 20% each time. And so I think if you're an institution and you want to deploy large amounts of money, I would actually go with a fund of fund. If you're sort of more privately and you kind of have some fun, I would definitely do, Bitcoin is kind of the crypto ETF, right? There were these ETFs, I don't think you really need them. Bitcoin kind of is correlated with everything and it's the least volatile, right? So if Ethereum, if Bitcoin goes up 1, Ethereum goes up 1.1. And so the way down, right? So if you're depending on how much fun you want to have and how much of a roller coaster you want to go in, and you buy Bitcoin, that's a baseline, which is also very volatile. And then if you want to have more fun, you buy Ethereum. And if you really want to have a lot of fun, you start, investing into some of these, altcoins. I think there's another thing also that one fund, I forgot the name, an American fund, which I actually say, and I thought it was interesting because, we kind of grew up, and the boomer generation sort of grew up with this. Investing is a very, very serious thing. And, you have the guys with the bow ties and they talk very serious. And it turns out that non-millennials, actually, they are generally more, they're not serious. Let me say this, just because it's a professional environment doesn't mean that it should be fun, right? And so what crypto has on the long tail, a lot of these coins are, part of it is meme. If you look at Chainlink, most of it is memes, and most people have bought it because they have funny memes and it's fun, and I'll throw $20 in there, I don't care. And so I would also give some slack to this kind of approach, which obviously is very, very contrarian, but for a lot of, especially in Asia, for a lot of retail investors, this is not that serious. They just want to have some fun. They want to tell their friends what coins they bought, and they do $20, and instead of going, I don't know, going to a casino or going somewhere else, they just buy a coin with a funny meme, and that is it. So I think you have the whole spectrum from like very serious, obviously ultra professional, institutional capital. I would say go with a fund of fund to buy Bitcoin and Ethereum. You can't be wrong. and then all the way to, okay, I want to have a lot of fun, and I know this is semi-serious, and you know, you have literally thousands of tokens you can play around with great memes. Yeah. If anyone's up for some fun, I recommend to basically, you know, look for chain link memes and.
Okay, interesting. Who else wants to take the question about? I quickly repeat it. What is the best strategy to benefit from the uprising technology? You know, like focusing on one asset, focusing on a basket of asset. Who else would like to answer this question?
I think I would go with at least one observation that certainly holds true for Germany, and that's let's make the distinction between institutional and retail. But if you're a retail investor at the moment, I think it's hard to beat also the tax advantage if you just buy Bitcoin easily via, you know, one of the easy entrance apps, Bison or whatever, and you keep it for more than a year. Yes, you have volatility in between, but whatever gain you're making after that is tax-free. That needs to, you know, compete with any more actively managed product. And it's not that difficult to hold it anymore. It's not that difficult to store it anymore. There are also regulated institutions. You can use it with your bank account. It's very easy and smooth right now. So I think for a retail investor who has a longer term view and doesn't want to do any day trading, that is really the best way. And then you can pick for whatever coins they offer. I think for an institutional investor, the discussion needs to be way more differentiated and needs to be a bit more with a more overall view of the next 10 years. Because the big question that we have right now is a lot of people went into cash because the risk limits told them to in the crash in March. But do you really want to reassign your cash in airline stocks or the SPG group or other hotel companies? I do think we have one of those rare moments in asset allocation where you really need to reconsider your overall allocation and growth strategy for the next 10 years, because with low interest rates that will, you know, be there, with the rising inflation risk and with the, you know, government debt, you need to think, what do you do with your money for the next 5 to 10 years? And then one of the few answers that you have with, you know, underlying growth will be technology, and technology with blockchain, you know, taking a big share of that. So I do think as an institutional investor, you need to have a mixture between actual venture capital, but also, you know, trading, and particularly also, you know, some, let's say, selected technology bets. So if you think that Ethereum is going to make it, or Ripple or whatever. I'm not sure that I necessarily would go with fund of funds, but obviously we can disagree in that, because I feel fund of funds, you pay a lot of fees for a hedge that just, you know, makes your reporting more pretty. I think whenever you are an actual principal investor and you do take your fiduciary duty seriously, you shouldn't really scam people of fees left and right. You just, you know, take a bet and go with it, not just, you know, have a nice Q1 reporting. But that's my personal view.
Yeah. Yeah, I definitely, I can agree here. Definitely, we need to separate these two in investor perspectives, so private or institutional investor. As a private investor, as Lasse mentioned, there are also some professional investors in the market, but also some gamers. They just deploy some very tiny money and look what's going on then, and it's more gaming and betting than real investing. However, private investors have different needs and compared to institutional investors. And I don't know if Lasse means a fund of fund, really fund of fund, or more the index things which coming up into the market. I think for institutional investors, these index fund makes sense at the end. And what we also see here that established players providing these products, because it's key for institutions that not a super young, very tiny company come into the market and will sell some interesting products. They will not adopt these products, of course, because they need this infrastructure and trust in the counterparty. So maybe it's a combination that startups, for example, can create really good technology and products, but need an established player here to join or to have a cooperation, and then bring a very interesting product to the market, because the institutional investors want to have the same investment scheme that they know from the existing world, stock world, or other facilities that they buy right now. So then the custodian service is key in this context for institutional investors. So it's a totally different play than when you are a private investor. You can open up a wallet pretty easy, and it's on your own risk then, of course, to observe your own holdings. So my view here is definitely that for institutional investors, it's more index funds which will take over and which will be invested in than directly in Bitcoin or Ethereum. And on the private market, I agree with Katharina and Lasse. It's more related to Bitcoin, Ethereum as the locomotives here, and then some gamers and bettors on gambling with these altcoins and maybe deploy some tiny money.
Okay, I think what we heard in total is that it makes sense to distribute the assets. Now let's take the other perspective. You know, I think we are all very, very bullish on this technology, believing in it. Otherwise, we would not be here. Otherwise, we would not invest. What are like key aspects why blockchain could fail? You know, so is there any reason validly out there why Bitcoin, Ethereum, tokens, startups, and so on would crash down to zero? So that's basically the key risk out there, that values are really dropping significantly. Do you see any major risks out there? Actually, I think Bitcoin is the risk in case Bitcoin fails for whatever reason, hash collisions, 51% attacks coming from China and so on, then this will be dangerous because then all our jobs will be gone. That's why, so therefore Bitcoin is some kind of, let's call it key man risk, even if this word doesn't really fit. But would you agree, or what other risks are there which would basically remove all our jobs and our assets more or less immediately?
I don't see any catastrophic risks like that per se, where all the jobs in Bitcoin goes to zero immediately. I mean, there are some technological risks, but I see risks that are a little bit more subtle. So for example, you know, right now the SEC is starting to send out letters to people that invested in SAFT tokens, so agreements that were sold with SAFT tokens, like Hedera Hashgraph. And you know, there's investors worldwide that invested in that or bought a SAFT token agreement off of original investors. And now that the SEC is going to start investigating those SAFT agreements, this can impact the global market, the global price for that coin. So I think that regulatory uncertainty coming out of the US and out of the European Commission and out of Europe in general, I think that's very concerning for investors. And then from a kind of economics, long-term, you know, tokenomics or economics perspective, I really think that the loss of the inflation rate and the transition into transaction fees, for me, that's a very scary point for the future of cryptocurrencies. I don't believe that second layer networks on Bitcoin are going to be very successful at incentivizing people to validate transactions if there's no inflation rate from the protocol. And I see this a lot in Dash, especially where I've been working more, but it exists in Bitcoin. And when that happens, and when the entire network is reliant on fees, I'm not really sure who's going to be willing to pay for those transaction fees. So for me, that long-term uncertainty is being priced into the market today. And if we can find solutions to that, I think that this technology would have an even higher price on the market today.
I see a big catastrophic risk, and we had this on March 12th, is these unregulated futures exchanges with 120x leverage. And, you know, basically BitMEX dragged the whole market down. There was up to $1,200 price difference on BitMEX itself. It was just auto liquidating itself. And I generally think it would have liquidated Bitcoin down to the price of zero. If not, someone had, you know, normal futures markets, they have a circuit breaker. And you know, okay, this is basically deleveraging, it's out of control. We're just going to pull the plug, reset everything. But when you have these automatic liquidations, they just don't stop. And they didn't, right? And this is why anyone who's watching this on March 12th, okay, there was sort of the first drop was sort of global macro related, but then that triggered all these margin calls from miners, and then the liquidations on BitMEX started happening. And the only way it stopped is that someone basically DDoS attacked BitMEX and took them offline. So, I mean, really think about that, right? If that hadn't happened, because we were active in the market, at least sort of buying, and then once we saw these things happening, we just stopped. We said, we don't know where the bottom of this is. And it wasn't, you know, support or anything else. It was purely that someone took BitMEX offline and they stopped the liquidation. So I see these unregulated futures exchanges as a big risk. Yeah, anyone who trades those, because nobody can see how much risk is being built up there. I think also to transaction fees, that's also a big question. So I just yesterday put out a tweet basically that shows which layer 1 chains actually command any transaction fees, any meaningful ones. And when you see it, it's really, really ridiculous. It basically means that Dogecoin has more traction than Tezos, yeah. Right? So Dogecoin has more transaction fees in 2020 than Tezos and all these others. And it's Bitcoin with around 25 million, it's Ethereum with 11 million, it's Terra with 2 million. And then the next one is Litecoin with $64,000. So we're kind of going to see that once these inflation rewards run out, you will really see which ones are going to have basically no security or an extremely low security budget.
Interesting points. Any risks from other people? What about China? You know, China is some kind of huge risk because in case China is, for example, I don't know, engaging in mining, you know, taking over mining companies over there, then they could do some kind of orchestrated 51% attack, possibly. I don't know. What other risks are out there? What should basically prevent this ecosystem from an uprise? Any ideas?
Well, I think in general terms, we have, you know, as in any emerging technology and emerging ecosystem, you still don't know who's going to be the winning bet and who could take over and just impose his standards. I do think China, not as much as a 51 attack, although that is possible. I think it's more what is going to happen with the digital yuan, what's going to happen if they integrate it so much in all their other systems that then they can really control the technology usage for the most, let's say, big markets, the corporate markets and the business markets, and then they could, you know, start fiddling around with what other Bitcoin, Ethereum, or whatever links you could have, and they could, you know, by market share determine what's going on, very much as, you know, the Americans determined in 1972 what happens with the rest of the financial system. So I do think there's a governance and policy and how will the future financial market system look like, where we don't know yet who's going to be the most powerful and therefore dominant actor. That's one. And I think also the other question is, will we actually see the technology to rise to one of the standard industrialized use technology? So does the technology promise also hold true, or is it just a speculation? I think that's something where we're still battling, right? I don't think that has been decided yet. And obviously all the excitement in retail announcements that currently also drive prices may not be there if, you know, we see that something else takes over. But I think also that is something that will be a development over time. That won't be a salad like BitMEX. And I do fully agree with Lasse on one thing. The exchanges as they are today and all the different shades of trading that they allow is something that is an imminent risk to the sustainability for asset managers to be in that business.
Interesting point. So what about this entire topic around token engineering, tokenomics, and what we had like some years ago? All of you have some experience with regard to tokens. I had another phone call with Lasse, I think 4 weeks ago, that was very interesting. It also made me thought, because he argued that tokenomics is far from dead. So it's still there, but maybe it's still in the very, very early days and needs more years to grow up. You know, like this token engineering, how to define the token to align incentives and so on. What's your take on this? You know, because it's directly related to the price of a token, but so far people have dealt a lot with tokenomics and not always it really created like a beneficial outcome. What's your take on these token economies out there, which we have seen like in hundreds of times and only very, very few really work?
I'll let the others go first. It's kind of clear what my opinion is.
Okay. Stefan, would you like to talk about tokenomics, because you are apparently related to EOS? Yes, but besides this, you are still investing mainly in equity of startups.
Yeah, of course, we are related to EOS.io, of course, not the token EOS, but support, of course, the EOS.io blockchain solution. Yeah, tokenomics question, dead, alive, or still coming? My opinion here, definitely we need we need the tokenomics more than ever. So I think it's very important to have the tokenomics and to have more studies here about tokenomics and to make it more easy for the crowd to understand what is the value of the token they are buying at the end. So when you see the white papers from 2017, 18, and also sometimes in 2019, tokenomics or the paragraphs was not so extended and not so I think super sufficient to understand what is the economic about the token they are offer and what is the value behind. So I think we need definitely tokenomics to understand at the end what is the value to comparable to other tokens which are offered in the market. So for us, of course, it's definitely one of the due diligence part we are doing when we invest in companies, because we only invest in equity, of course. So we take direct stake in a company, so we are the shareholder at the end. But when they offer a product which is linked to their own token, the tokenomics are of course key. So our last investment was in Gapless, a Berlin-based blockchain company, together with Porsche AG, and so they have really good tokenomic section in their paper, and so for us it's definitely it's key, and we need more study here to understand the value of tokens. And yeah, so for me it's not dead, so to speak. It's far from dead. I think we need more studies here to understand the value.
Lasse, now we should hear your opinion. Even
so I think the shorter version is, for us, what is really, what is the key value proposition of blockchains? For us, it's trust, right? So it's minimizing the cost of trust down to almost zero. And trust is roughly, the cost of trust is roughly 35% of the entire global GDP. So that's $28 trillion, right? So, and cost of trust, what is that? That's a manager that makes sure that the people work. That's an auditor, that's law enforcement, that's a judge, etc. So it's trust is very, very expensive. So think about it. Why do you pay a bank fees? Really, because in the essence is that you can trust it that they're not going to run away with your money. And that trust of cost is vaults, administrators, that is the regulator that checks that they have, all the systems and process. All these things are incredibly inefficient. And one way that blockchains enable this cost of trust or trustless systems is that they are, in fact, they are open source, they're peer reviewable, and that is why we can trust them, right? And they're accessible. So meaning that in Bitcoin, I can become a miner, I can add transactions, I can verify transactions, and we all, and anybody in the world can become a part of this and agree, yes, this is the truth, and this database, what is in there is truth, and we don't have to argue about it. If I compare that with, I don't know, a Deutsche Bank if the money's there, and in fact, actually, last week with Protos, Philipp, who was working, I think, at, I don't know if it was Deutsche Bank, he said a lot of times the money actually isn't there. And they have a lot of problems actually consolidating all their, all the different statements. If I trade on the Deutsche Börse, I don't know what's going on there on the servers. Nobody knows, right? We think there is a regulator that has a deep tech experience to see what the servers are doing. And with these systems, when they're open source, anybody can peer review them. Anybody can download the code, go through it, peer review it. You have papers. And basically what that does, it creates trust. But you also need the incentives for anyone to participate and contribute to that. And this is why these, when I hear like, blockchain or Bitcoin, you're really completely missing, in my opinion, the entire point of basically blockchain, because blockchain, the killer feature of blockchain is reducing the cost of trust to almost zero. It's a massive market, it affects almost every industry in the world. But for a blockchain technology to be trustless, right, and which is what enables it, the cost of trust to be reduced, it needs to be open source. Now, when it's open source, it means you don't have a business model anymore in the traditional sense, because the traditional business model is, I have a technology asset, it's proprietary, nobody can steal it, nobody can take it, and I charge rent on the usage of that. Now, the core is, right, again, it needs to be open source to be trusted. It means you don't have a business model anymore. You're not a company. And now you have a token network, and you're trying to incentivize with that token, the different actors and the stakeholders in the network to do the work, right? The miners to verify transactions. Could be other networks that, where people sort of supply some other form of labor or value, etc. And then there's these sort of users. And for those, you need protocolized economic incentives, which are distributed through the token. On top of that, maybe part of the trust also comes that you have governance. I'm not saying on-chain governance is perfect yet, but there's very, very promising attempts being made and progress. And that is also the way to digitize that is just a token. So this is why, sort of very, strong thesis around why these networks need to be open source and tokenized. But this is, again, I would delimit that to very large software networks that are almost of like societal or global importance. I don't think it makes sense to tokenize my supermarket or something like the taco coin, which in 2017 we thought was a thing. I don't believe in that either, right? Back then we thought, okay, you have, for tacos, I'm going to use taco coin, and for, I don't know, bread, I'm going to use a bread coin, etc. No, that's not a thing. But if you have, a huge global software network that is something like money, that is like, the reserve asset like Bitcoin, that is sort of immutable storage like Arweave, those things will only work if they're open source and they have a token.
I think
yeah.
I would like, Philip, if I may, sorry, I think
yes,
I would like to elaborate and expand that view a little bit, because yes, I do also subscribe to the trust argument, but I think in the end, there's a whole other aspect to it that we maybe also in the Western world overlook a little bit, because we think the trust is more valuable. But if you look at what China has been doing with the blockchain as a service network, with the whole use case of Tencent having the invoice and the settlement and the tax declaration and everything tokenized by a transaction token. And then obviously the term token is so, multifold that it becomes hard, so we don't get confused, but let's just use it for the shortness of the argument. So I do think that the whole transaction cost reduction point and the enforced standardization point, and making any type of transaction quicker, less expensive, more globalized, with lower barriers to entry and lower minimum sums and all that, will also have a big impact. But it will be so profound that it will actually change the monetary and the financial system. And I think China is just going to push through. And once they have 1 billion plus people using it every day, then that will pour over to the rest of the world. And I think right now in the Western world, we do look at the let's say organic growth of it and the trust and what could that be as a future technology with benefits. And China just goes full on with the strategy, top down. This is what we're going to do. We're going to enforce it. We're going to, create the momentum. And then retail adoption, is by design, not by trust and build and whatever. And I do think that that's going to be a massive kind of system defining moment for the whole technology and its usage. And I do think, because you will be able to save massive transaction fees, that this is going to be also a driving force for the entire asset management industry, because nobody's going to be willing to pay auditors, tax advisors, notaries, multiple negotiations of fund terms and all that if you have a default scenario that you can fall back on and that's administered easily, is more liquid, and in the end costs you less fees.
Yeah, I think I try to reconcile this because it makes very much sense. On the one hand side, you have maybe untrusted environment, countries without institutions, maybe personal relations in the retail area where people are lacking trust. In this case, probably public networks make sense. And once you are in B2B networks, institutionalized regimes, trustworthy environments, then you can leverage these existing trust environments and institutions, say China, Germany, Europe, and so on, and then get all the gains from transaction cost reduction.
I would actually add that the global market for trust is actually up for grabs. Look at
final statement, but we really have to be careful with time. So therefore, you can have the last words. That's fine, but we need to care about time because we have people promised to be finishing in time. But you have the last words. That's fine.
I'll take 30 seconds only. So we actually think that yes, there was a narrative that third world countries don't have trusted institutions. This is why blockchain is good there. It's actually that trust in all global institutions is falling globally. So the trust in the government is at historic lows. Trust in businesses is almost at historic lows. Trust in media and NGOs is also at historic lows. And we see this with Corona now, that WHO, for example, all of a sudden is not a trusted institution anymore. So I would actually make the case that this market for trust is up for grabs everywhere across the board.
I completely agree. And I think on to Lasse's point earlier, regarding the tokenomics, again, I think this comes back to a regulatory topic because these businesses don't operate the way that we're familiar with. And for example, with the Dash network, we wanted to find a way to overcome this loss of inflation. So inflation goes away and we want to find a way to still incentivize masternodes, who are the ones that do the second layer payment networks, right? So we need to pay them for their service. And if inflation runs out, we can't afford to pay them from the protocol, and there's no other incentive. So we were going to create a new treasury that was funded by existing inflation rewards, so that when the existing inflation runs up, we can pay those master nodes in the future, and that would be based on that node's uptime, how many transactions they did, etc. But that becomes a security in America. So any time that we want to pay out master nodes that's not from the protocol itself, but from funds that we've saved over time, the government is saying that's an unregistered security. So I think that in order for us to for tokenomics to be alive and for this these networks to grow, we need a regulatory certainty where we can adapt the business model and use tokens to facilitate trust and pay for trust. So I completely agree that this is a big market that's available, but we need to be allowed to innovate within it for this to succeed.
Actually, I like this discussion very much, and I would propose, because we are already over time, I would propose we make a round 2 of this discussion and continue exactly where we are now, talking about institutions, trust, and where blockchain could help here, including cost reductions. But I think for now we have to close our round here. But thanks very much. I learned a lot about tokenomics versus cost reductions, and also various possibilities to invest in blockchain. Maybe I hand now back over to Jan, who just does some 2, 3, 4 closing words. Thanks.
Yes, thanks a lot for the engaged discussion, everyone. Also, thanks to all the questions in the WhatsApp group. So a quick reminder for those who maybe joined a little bit later. In the email you received, there's a link to the WhatsApp group where you can join, ask questions, and the speakers are in there as well. So maybe we can keep the conversation going after this webinar has ended. So I hope you can see my screen. Next week, we will discuss bridging the real world assets to DeFi with another set of interesting speakers. And you will receive an email for that, or you can follow us on LinkedIn, where we will always post updates on future events. So that's probably the easiest and most convenient way to join and get updates on what we do. So that's it from my side. Thanks a lot, everyone, for joining. Thanks to the speakers for their insights, and I hope to see you all again very soon.